All right, all right, all right, all right, all right, all right, all right. It is Thursday, August 28th. Um, a lot going on today, so I wanted to get on here and do a quick market overview. Trying to do these every other day or so, maybe every 3 days, just to keep up with the flow of markets, the narratives, the news. Because if you're in this game and you want to have a chance at all, you got to stay dialed in. You got to stay dialed in. So let's go take a peek at what is going on. First of all, we had some data this morning. Jobs, I believe it was continuing claims, came in on roughly expectations. And then actually, first, I will remove this and I will present a different screen that shows some of the data here. 1 second. This should work. Okay. So we had some purchasing, GDP growth rate kind of stuff. Feiha did a great, Felix, I should say, had a great little summary here. We had consumer spending real strong, above expectations, growth rate above expectations. And then this I thought was really interesting. Consumer spending and fixed private investment increased 1.9% up from the previous estimate. So the consumer is strong, the economy is strong, and as we've discussed before, the real threat here is not, you know, a recession or yields dumping off. It's inflation, actually, and what could be bad for that? Maybe cutting rates into an inflationary, strong consumer and market. We'll see how it works out for us. It looks like we are going to cut rates in general. So, all right, let's bring back up the trading view here. Boom, boom, boom. Move myself down here. Okay, let's go up to stocks. They are pretty much unchanged today, but I would expect to this. All right, I just think we're heading up now. After seeing some of this data flow through, I mean, we do have PCE tomorrow, and as long as that doesn't come in like super hot or something, um, I think we're just gonna go, especially if it comes down, like if it comes in below expectations. It's just gonna match like the idea of a rate cut and not going against inflationary pressures even more. So I think like as long as we come in um, around expectations or below, um, I think we're just gonna have a strong finish to the week here after kind of a questionable start post Jackson Hole. But as we talked about a couple days ago, Jackson Hole's Friday. We have this crazy market. Monday, we have a pullback. And then it's like, okay, how are we going to actually digest this information and move forward? I think we're starting to see a glimpse of that. Um, and it looks like the bulls probably have a chance. Now, if we look at gold, I mean, we're waiting for gold to rip here, man. Look at this thing. If you guys like your little bull flag bullshit, like, dun da da da, is that a flag? I don't know. It looks more like a newt or whatever you want to call it. I've been learning a little bit more too about like okay, let's say that um, we move forward, we cut rates, and long end yields actually don't go up. Then there is a place where there's a release valve, which would be the currency, right? Which would devalue. But theoretically, if that devalues and we put even more money into the system, it it well just creates more inflation. Prices go up nominally, and they kind of, the same problem happens where like you lose purchasing power, and that can also be problematic down the road. So I'm really interested to see here once we get past September into November and October, like how is this all going to play out? Like if this doesn't just fascinate you, like I don't know what does. Because I remember in like 2016, 2017, 2018 being bored out of my mind. Markets had no volatility. They just kind of chugged along. They went up. Macro was boring. It was all about crypto in 2017. That was the most fun in crypto ever. Everybody was like all excited. We were changing the world. Changing the world, you know? So that was super fun. Anyways, 10-year yield, kind of interesting here from the American side of things. What do you guys think is going to happen here? Is it going to break down? Are we going to bounce up and go look at the upside? I don't know. Let's go look at globally. Sorry, I got to get, where is this? There we go. Japan. Interesting spot here because Japan on like the 30-year or whatever was ripping to the upside. But what if we have a false break and this starts to come down? Maybe these start to come down in the UK. Maybe the German yields start to come down. Maybe the US yields start to come down and we just start to gig ascend. That'd be interesting. Again, crypto is generally speaking kind of this leading litmus vibe check, speed check, if you will. Strong morning this morning. Another decent kind of reaction here off a support area. But again, we got to see this hold. Like if we break below this 108.5 here, I'll be de-risking a lot. Something will be up. I don't think we should be going down right now. So that might lead into like some sort of weird September OPEX shenanigans that I'm not seeing right now. But I expect this area to hold. I'm fully allocated until that breaks. That doesn't mean I'm super excited about holding like anything really out the risk curve, like memes or treasury companies or anything like that. But for right now, that looks good. And I think that's just, again, kind of telling you where price is headed. Now, Russell, like we've talked about, watching the Russell and Ethereum, right, as this sign of like, things are good. Things are moving out the risk spectrum. They're kind of running together, right? So if we see ETH continue, Russell continue, maybe Russell make new highs, like to me, everything is looking good. Now, again, VIX has stayed low. Doesn't mean it's just something to think about. It doesn't necessarily mean like it can only go up and then equities only get blasted down. Like no, we can just chug along here. Like look at how long there are stretches of like volatility just being dead. You know what I'm saying? There are obviously other areas. 2020, like this was all wild. Like this was just all wild. Nobody knew what was going on. But prior to that, I mean, it was just a low VIX environment. You'd have these random scares, but it would get blasted down. But this whole multi-year chunk of high volatility was very interesting, and we're starting to dilute all that and just compress. So, and then you got the bond volatility index still looks, subdued. Money is still being created. M2 and M0 going up, and high yield credit strong, no issues here. So until like we see, pressure on yields to the point where credit stress comes, volatility comes, I just think it's still bidding season across the board. Pick your favorite asset, whatever you're most comfortable with. So outside of that, I'm thinking we end strong into the end of the week here. Or just go sideways unless we have some random bad news. Otherwise, send it. See you later.